What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day. Wednesday, April 17th. Alright guys, Tesla here today down $4.37 per share in regular trading hours. It's minus 2.71%. We're up about $1 or so after hours. Volume's low, take it with a grain of salt, but you know, it's the real price, so I prefer it's up rather than flat or down. But listen, in this video, we're just going to quickly peel back all the layers of the onion and pull back everything, or pull out more so, everything that we possibly can that isn't incredibly obvious, simply by looking at the price action. There's a lot of directional and volatility bias that we can pull out to help us understand this thing quite a bit better. Let's start by doing a quick little volume profile analysis here on the 5-minute chart, and we'll circle up the moves that I'm mostly interested in here today. I want to take a look at that test of that 154.50 area, which we know is a big technical level on the daily chart. And I'm not going to bother circling, but I also want to take a look at these little fades that we got there later in the day. All right, so let's pull this up and take a look. We have a higher volume open. That's very normal. Volume faded very quickly and kind of, went into the normal intraday volume very fast. We got a little bit of a pop here in green volume. Yeah, we also had that one red bar hang on, so I'm going to cancel those two out in terms of directional bias, bullish versus bearish. There's really not a lot that's obvious there. As we move through the day on those little fades, we get a couple of potentially fooled by randomness candles, just single outliers. I'm not really a fan of assigning any bias at all to those. Then we get a very contextual close, just fading upside into the close. This bar here, by the way, a very normal first bar after the closing bell, right? That's going to be institutional rebalancing. Okay, for example, if we compare this to yesterday, we got a lot of rebalancing after the bell yesterday, but it rarely actually leads to a lot of price movement, all right? Now, today's open was a little bit higher volume. Okay, we had over 5 million shares on the open. However, after yesterday's, news day, it's not really all that surprising. So all that being said, let's move on here and actually see if we can pull something out, because that volume profile, we have to look at it every day. But some days there's nothing really there. And by the way, that doesn't mean there's no information there. For example, today's a 2.71% red day. If you're a bear, you're looking for massive bearish bias to support that price action. It's not there, really. I mean, if you look at it, it's really not there at all. And if you're a bull, what's done is done. It's down 2.7% today. Okay, so you might as well not have bearish bias, at least massive bearish bias, in the volume profile, and it's really not today. Okay, so as a bull, the stock's down, but you'll probably take that if you're a bull. The state of the volume profile, that is. Okay, so here on the 30-minute chart, you can see that this 50 period came downside very quickly, as we discussed in yesterday's Tesla video. Listen, by the way, Tesla's a daily upload here, and my goal is to hit 7,000 subscribers. So please, if you like Tesla, I'm covering it every day. Please subscribe to the channel. It helps out tremendously. But that 50 period, we talked about how it was likely to come down very quickly. We got that here today, and it's essentially a buck. It's like a point away now from the stock. That's how quickly that 50 period moves on the 30-minute chart. Bears, tomorrow, if you guys can sustain that, if we test that, if you can hold that as a resistance level, that's a great position to be in. Whereas bulls, a reclaim of that 50 period would be great. Ideally, a break on high volume, a retest on lower volume, and then a high volume pull away, confirming that as short-term support, and ideally even better, yanking that into a flattening out and then upward trending position yet again. Getting that above 160 would be the best case scenario. At least, if I'm looking at that from a bullish perspective here on the 30-minute. All right, now let's take a look here at the 4-hour chart. You can see, honestly, guys, I'm always watching the 4-hour because it can come back into play very quickly. Like in a single day, this thing can be back in play. Right now, all I'm paying attention to on the 4-hour in particular is that 50 period. It just crossed below 170 here today. Bears, you guys like to see that potential psychological resistance level crossing downside below psychological round numbers. You like to see that, like stair-stepping to the downside. But just understand that, I'm really going to be paying attention to the 4-hour only if that 50 period comes back into play, meaning the stock heads back up toward 165, 170. Okay, until then, I'm more so just watching the average. Whereas, you know, if I'm a bear, I want to see that continue to stair step down, move downside as quickly as possible, the 50-period moving average, the white line, right? Where if I'm a bull, I want to see that thing flatten out and stay as high as possible so that we can start making our way back up there and not give up too much ground on the psychological moving average itself. But that's really it here. So let's move on to the daily, which is the real story. And you can see that Tesla has earnings coming up on the 23rd, okay? But this thing is just lower and lower and lower lately. You can see we're hitting new lows today that haven't been seen going back to about this time last year, April 27th of 2023. Okay, so let's zoom back in and take a peek at this. This is the real story here because this has the most eyeballs, therefore fulfilling that self-fulfilling prophecy mentality that I like to look at charts really using. Really all this is, guys, is psychology. And stocks in the very short term are massively psychological. In the long term, and even sometimes the midterm, fundamentals absolutely take over. But in the very short term, like day to day, assuming we don't have earnings or anything that day, this is all psychology. So this is pretty obvious here. I want the most obvious story. Right now, that 154.50, 155 area up to 160. That's the channel I'm watching. Bears, a crack downside of 154.50 and a hold beneath that is your goal. Because that opens you guys up. I mean, there's really not a whole lot of technical, psychological areas after that, aside from 150 as potentially a psychological round number. Aside from that, bears, that kind of opens you guys up a little bit to the downside. So bulls, I want to see 154.50 hold as a support level. Okay, if not 155, but we could potentially look to utilize that to make our way back up and reclaim 160 and then look to 166.50 and so on. Now, implied volatility here compared to the last month or so, sitting a little bit high. Okay, it did fade a little bit today, but understand that those of you looking to purchase new options with IV high, you're running a little bit of an elevated risk of IV crush if that comes back down if you purchase while it's high. All right. The expected move here on Tesla by Friday's close is plus or minus $6.74 per share. No earnings between now and Friday's close. Okay. So if we go ahead and divide that by 3 trading days, the expectation by tomorrow is about $2.25 a share, but we have to add 50% back to that. That's at least what I'm doing in this current market. That can change market to market. But that's because I add 50% back because the previous number, that assumes 3 green days in a row or 3 red days. Right, so that gives us about $3.37 plus or minus volatility expectation by tomorrow, Wednesday's close. That's what the market expects in terms of movement in Tesla. Okay, now one more thing we can do here for directional bias. What was the options traders bias here today? 2.23 million contracts traded, 1.02 million were calls, and 1.2 million were puts. So listen, on the overall call-put ratio, we are seeing a slight put-side bias. However, when we break this down by the short-term speculators in the 0 to 20 delta range, those are those like short-term gambly style bets being placed day to day. 478,000 calls and 307,000 puts. So that bias flips from bearish to a bullish bias when we start talking about short-term specifically. Listen, if you're getting value out of these Tesla videos, guys, let me know in the comment section, please. That feedback helps out tremendously. It is a daily upload, so subscribe to the channel if you haven't done so yet. I appreciate it, and I'll see you in the next one.